Watch this video to the end if you want to learn on how to grow your small trading account into a very bigger amount of money, following some few steps that I'm going to show you right now in this video. So if you're new to the channel, my name is Joshua, and on this channel I've been teaching a lot of things about the forex market, starting from the beginners level to the advanced level. I've taught a lot of things in the market already, and you can get back to my old videos and get to watch more, so that from there you can get to learn and get to make money for yourself, guys. If you're someone that have traded a lot of small accounts and you end up blowing them, I think this is the right time for you to settle down and get to learn these things. So from this video you can get to learn on how to do it the right way and get to make money from the market, because there's lack of information that makes a lot of traders to get to lose money in the market. But after giving the information in this video, you get to see profit like this, and also this in the market. So that from there you can get to know that this actually works in the market. So don't struggle anymore, spend a little time with me. Let's get to make this work out for you also in the market, guys. So let's dive into the video. Let me get to show you the strategy and the risk management plan for this in the market, so that from there you can get to add both of them together and get to see results for yourself in the market, guys. Alright, as you all know, to grow a small account, you have to do it in two ways, which is one, in a consecutive way or in an aggressive way. So it's either you choose the consecutive way or you choose the aggressive way, and one out of these two can also make you profitable in the market. Let me get to show you the consecutive way of growing a small account, then I'll get to show you the aggressive way of growing a small account also in the market, guys. Let's get into the consecutive way so you can get to learn on how that one works in the market, and also see if it's something that you can try in order to see if you're going to make money trading that in the market, guys. Let's go. Alright, so the first step you need to take whenever you want to trade the market in a consecutive way is getting to find out where the market is going to exactly, because the ability to know where the market is going to is going to be the only reason whereby you get to make money in the market. But not knowing where the market is going to help you lose a lot of money in the market. So on this market now, this is BTC/USD. You can use this strategy on both forex, crypto and stock. Whatever asset you're trading in the market, you can use it and get to trade it and get to make money in the market. Even volatilities, you can use this to trade the volatility market and still get to make money. So right now that we're on BTC/USD right now, what are we trying to find out now? We're trying to find out the direction of the market. We're trying to know where the market is trying to reverse to, or where the market is going to push from. Then from there we get to get more move that will push the market toward the upside. So right now we're currently on a very good uptrend in the market. And on this uptrend now, what do we expect? We expect buys in the market. But currently the market is trying to drop towards a area in the market or a zone. Then from that place the market now gets its direction again. Then from that place the market to gain more strength and start pushing toward the upside. So right now on this asset, let's bring that horizontal line and get to draw something on the chart now. Look at horizontal line around this place whereby we have object in the market. Then you tap on your screen, you get to place it on your chart, guys. So right now on our chart, this was gonna happen in the market. We're going to look out for areas whereby the market hasn't tested before, because around this place now you can see that there's a lot of rejections around this side, and around this place there's an area whereby the market is expected to test around, and the market came and got some kind of rejections around this side also. So right now this place has been tested in the market. What we're going to look at now for is another area whereby the market hasn't tested before. Then from there we get to know what's going to happen in the market, because if you want to trade the market, you have to trade it historically using the left hand side to find areas whereby you should wait for at the right hand side. And from there you get to enter the market and get to make money. This is a top secret that I'm just sharing with you right now, and I believe you get to write it somewhere or get to put it somewhere in your brain so that you can get to understand what's happening in the market and get to make money like other traders in the market, guys. So right now that I've tested this zone in the market, which is this area in the market, then we have tested this zone in the market also. We are going to test this place to see if this place is still active for us to get our interest in the market and get to make money. So I'm going to drag this horizontal line back to this place at this point. So right now I've dragged it to that point. Let's go to see if the market has tested there before. Alright, so the market hasn't tested there before, and around the side why we have to choose that place is because in this place we have a retest in this place, not too strong. We have another retest in this place, and whenever we have two retests in the market that is not close to the main retest point, we expect the market to come and do what? Break the both retest point. Then from there the market now start rising to the upside. So this is an area whereby we could have expected the market to come back around. Then from there the market now start going to the upside. But instead of that, the market came around this place, got under retesting this side, trying to make this one look like this is the strong one that's going to push the market toward the upside. But right now the market came, broke that place, and after breaking it, the market still didn't get that retest towards the side, but the market started rising to the upside. Because this is like a pattern that works mostly in the market whenever things like this get to happen in the market. So right now that we're expecting the market to get around this place, what are we going to do right now? We're going to go to our lower time frames and get to see if at all what we are predicting is going to work out in the market. Then from there we get to know if we are going to enter the market or not. So right now we're going to go back to our H4 time frame in the market, which is this time frame in the market, and get to know what the market is trying to do. So now H4 time frame right now, you can see that the market is still selling towards that side, and around this side where we have a horizontal line in the market, let's get to check if there are some places where we should drag this in the market and make it work out faster for us in the market. So around this side now, you can see that this place has been tested, and around the side we're going to drag it up a little bit. So right now we're going to drag our horizontal line in the market a little bit so you can get to touch the body of this candle. So around this body now, we're going to expect the market to come around that place. That is our plan A in the market already, because we're trying to trade the market in a very consecutive way right now. So right now that I've marked this out, this is our plan A in the market, and we're going to mark out our plan B in the market also, but not at this point. So right now on this market, we're going to look again to see whether the market has tested some areas already that we shouldn't expect the market to come back to this place again, or if the market is going to stop somewhere around this side, then from there the market now start rising towards the upside. So we're going to check out areas whereby the market has tested before and areas that haven't been tested before, so that if I thought the areas that have been tested before are many in the market, what we're going to expect is that the market should do what, break them again and get back to this our point, which is our plan A in this market right now. So around this side now, we have the market coming towards the downside. So we're going to check out if there are areas whereby the market should get around. Then from there we get some kind of retest that will bring the market toward the downside, and from there the market now start rising toward the upside. So around this side now, let's check again and see. This is the last place whereby we have this long wick in the market. So we're going to place our horizontal line around the side, and this place now, which is this area whereby we have this horizontal line in the market, we're going to check out if that place is still valid or strong in the market, and the reason why the market had to take that place in the first place. I didn't get around the second place, which I plan B in the market, to get a retest around there. From there the market now start pushing towards the upside. So around this side now, it's an area where we have an engulfing candle in the market, and the market didn't get a retest around this side, because if I thought the market got a retest around this side, it could have been stronger in the market and it could have helped the market to push toward the upside from this side. But since we didn't get that retest, this is not going to be strong in the market. We still expect the market to come and do what? Get to break this whole place. Then from there the market now start rising towards the upside. So right now that I've known that this is going to happen in the market, we're going to delete that horizontal line again. We're going to go back to our H4 time frame in the market and get to know what the market is trying to do. Also keep it in mind that you can only get your plan A in the daily time frame and also the H4 time frame for confirmation. Then anything around this H1 time frame is just an area whereby you can get around. Then from there you get to know where the market is coming from. Then from there you get to follow up with the market. If you want to trade from the area whereby the market is coming from towards the downside, then from there you get to trade and get to the downside, which is the area whereby we mark out on our H4 time frame in the market. So right now on this H1 time frame, look at that place whereby we mark out. So around this side now, there's no place whereby we expect the market to come around, and even though there's an area whereby we expect the market to come around, then that should be around this place in this market. So we're going to place an horizontal line around this side. So from this side now, I expect the market to rise towards the upside again, if I thought the market want to rise towards the upside, because right now the market is trying to gain more strength. Then from there the market now start rising towards the upside. So around this side now, this is the area whereby we had the market come around, and the market didn't even get to test it in the first place. So this is not going to be valid for us in the market, due to the fact that the market has come very close to there, didn't get to test it. So that area is not strong enough to push the market toward the upside, but rather we expect the market to go with our plan A in the market. So right now on this market now, instead of us to expect the market to come around this place to buy again, we are going to drag this toward the upside. So this place now in the market is an area where we expect the market to come around, and the market didn't get around that place. Although the market has used the fair value gap around the side to test that area, then from there the market is now dropping toward the downside. So the market is dropping massively, and around this side also you can see that there's an area in the market whereby the market came around, got a retest around. So around this side now, we expect the market to still drop toward the downside, since the market has used this place as an area whereby the market should go toward the downside with. So right now on this market, where do we expect the market to drop from again? We expect the market to either come around this side, then from this side the market now start dropping to the downside again, or get around this side, then from this side the market started dropping to the downside. So we're going to keep this as the area whereby we're going to expect the market to drop from right now, because the overall movement of the market is still a downtrend, and from the downtrend we get back to the buying point. Then from there we get to buy again and still get to make money in the market. So on this market right now, we are still going to go back to our lower time frame like the M30, then the M15 time frame in the market, and get to know where the market is trying to go to exactly. So let's go to our M30 time frame in the market. Let me get to show you something in this market also. Alright, so on our M30 time frame in the market, we're going to drag this a little bit towards the downside, so you can touch the body of the candle around that side. So touching the body of the candle on this side now is a pure confirmation for us that if at all the market gets around the side again, we get to enter and get to make money in the market. And another thing can happen in this market again, which is this part whereby we have this candle around the side, but this candle is not strong enough to push the market towards the upside. Then from there we expect the market to rise to the upside and get to make money from the market, guys. So let's go to our M15 time frame in the market right now. On our M15 time frame now, this is what we're expecting in the market. Alright, this is the area where the market came around, got a lot of retest around. Then right now the market has dropped a little bit to the downside. So we're expecting two things to happen in the market, which is one. This place now is the area where we're expecting the market to drop from towards the downside. Or if I thought the market doesn't get to follow up with this place, then we expect the market to move with this side in the market. But the overall movement of this market is around this side. So we're gonna leave this around this side. And right now what we're gonna do in the market is we're gonna expect the market to do what? Break this structure away. Then after the market has breaking this structure away, then we expect the market to come back to that side, because the market won't be able to drop properly if I thought the market doesn't take away this structure around this side. So around this side now we expect the market to do what? Take this structure away. Then after the market has taken this structure away, we expect the market to come around this side and we get a movement to the downside. If I thought the market comes around this side, we can start taking our positions around this side, but our overall stop loss in the market can still be around this side, because this is the area where we expect that if I thought the market comes around, then the whole of this movement have changed already. Because if I thought the market gets to take away the all of this place away, then we expect that the market has changed its direction, and this is not the move that we're expecting right now in the market. So right now, if I'm someone that is trading with an account of $100 or $50 in the market, this is what I'm gonna do right now in the market, guys. So right now that we have this movement already, we have found out what's gonna happen in the market. We have found out where the market is dropping from and where the market is expected to come around. Then from there the market now start rising to the upside, which is one of the reasons why we have a plan A in the market and we have a plan B in the market. So these are two approaches in the market. So right now in this market, now that I've analyzed the market and we know what exactly is going to happen in the market, what we're gonna do right now is do what? Go to the area where we're going to place our trade around. Then from there we get to know how much we're going to lose if at all the market goes against us, and how much we're going to gain if at all the market goes in our direction. So around this side now, you can see that the market has taken this structure away, which is this structure around this side with this place, and the market is behaving as if it's trying to get back to this place. Then from there the market now start dropping to the downside, or if at all the market gets to take this place away, we expect to move towards this side. Then from this side the market now start dropping massively toward the downside. So right now two things are going to happen in the market, which we have to calculate how much you're going to risk and how much you're going to get in return if at all the trade goes in our direction. So let me make my screen vertical at this point so you can get to know what's going to happen in the market right now. So on this market now, this is the place where we expect to be our stop loss area in the market, which is this place in the market. I expect the market not to come around that side if I thought this move is going to go where in the market, and if I thought I want to get my entry around this side, then this place is going to be my stop loss in this market. It's going to be very, very tight. It's going to be like a 50-50 chance of we getting to hit the stop loss immediately, or we getting to go to the downside immediately. But this side now, this is the place where I can trust on. Then from this side, if the market goes against me, good and fine, we get to lose little amount of money. So right now on this market, we're not going to use the lowest loss size as usual, because it's not going to help us in the long run. If I want to use loss size in the market, the lowest loss size on BTC USD is 0.01 in the market. You can see it right now, but I'm not going to use that because it's not going to help us to go far in the market. So if I'm trading an account of $100 in the market, what I'm going to use is 0. What 0. Let me add one again. Add 2, add 3. Okay, I'm going to use 0.05 in the market. And the reason why I'm using 0.05 is because it will help me make more money in the market if I thought the market goes in my direction. And if I thought I'm going to risk in the market, I'm going to risk something little on this market, guys. So right now we're going to tap on this stuff that gives us the ability to choose our buy limit area in the market. So we're going to drag our buy limit to this place. I turn to a sell limit in the market. Look at this place where I'm expecting the market to come back to. If I thought I get to place my stop loss around that side, I'm expecting to lose $27 in the market. And if I thought I bring it to this place now, which is this first place, and I place my stop loss around this side, I'm expected to lose $16 in the market. And what I'm going to make in return is about how much in the market. Let's get to find out place where we're expecting to be our plan A in the market. I think it's very, very far on this M15 time frame. Okay, still very, very far, guys. So let's get to find this in the market. Let me get to use. Okay, I've seen it right now. So our take profit is going to be around the place, which is about 535 in the market, guys. You can see how the risk to reward ratio is in the market. Imagine the market going in your direction right now as a day trader. Imagine making $535 in the market by risking just 16 in the market. That's a whole lot of money in the market. If you get to do this, you get to make money in the market. For instance, I try to use 0.01 in the market. This is what we're going to expect in the market. 107 in the market. It's not going to be big. It's just like you trying to double the account. It's not going to help you in the long run. It will only keep you in a cycle whereby you get to lose $2 in the market trying to gain about 100 and something in the market, guys. But it's going to take you a long time. It's going to take you a lot of time, and that's why you don't have to do this in the market. You just have to get to a place whereby if I thought the market goes in your direction immediately, you get to make something reasonable in the market, guys. Right now, let me get to show you how to also achieve something reasonable from the market, even as a day trader in the market, guys. So since you have understood how it's going to be like if I thought you get to swing the market from that point, let me get to show you how day traders can also make money in the market using this place. But as a day trader, I will advise you to use 0.05 in the market, which is one of the low sides that you can use and make something reasonable in the market, guys. So I'm gonna drag this to this point whereby we expect the market to come around. Then from there we get our sales in the market, and this is gonna be our take profit place in the market, which is this place in the market. That's gonna be our take profit in this market, and our stop loss is gonna be around this side as usual. I told you one step ahead only. So I'm going to be risking $11 in the market to make $99 in the market. And this is going to happen if I thought the market is going to go in that direction. For instance, I get to sell around this side. Then from this side, we get to use this place as a stop loss area in the market. You get to risk $7 to make how much in the market? To make 125 in the market. So if I thought we get to lose around the side and we get to find out another area again whereby the market is going to come around, we will still get to make money in the market or get to lose something little in the market. But before you try this like 3, 4, 5 times in the market, you're gonna make your money back in the market, guys. So right now, let's go to that place where we're expecting the market to buy from. Then from there we get to know how much you're gonna make in return if I thought the market goes in that direction. So we're gonna use our H4 time frame in the market, which is the place where we got our final confirmation around the side for the bullish move in the market. So around the side now is our H4 time frame in the market, and if I thought the market is to push to the upside, then we expect the structure to be taken out in the market, which is this place. We expect it to be taken out in the market. So right now we're going to go back to this place where we have our entry point in the market, and this is what we are going to be expecting in the market right now. So we're going to place our buy limit around the side. Around this side now, for instance, use this place as a stop loss in the market because we don't expect the market to go below that place. So we're risking how much? $29 in the market to make about, let's place our take profit in the market and see. 29 to make about, come on, it's not even showing that much again. Okay, all right, so I'm risking 29 to make $1,000 in the market, man. You can see how crazy the risk to reward ratio is looking like in the market. And if at all we get to even go to the lower time frame, we get to see that the loss is going to be very, very little and the take profit is going to be very, very high in the market. And if at all want to be shorting it little by little, for instance, we buy around the side and we expect the market to take this structure away first. Then we're still going to make 300 and something, get another retest around the side, expect the market to take this structure away. We are still going to make another what, 400 and something. If I thought we get to expect this place to be our take profit point in this market, we're still going to make 400 and something around this side. If I thought we get to find another support area in the market, as the market is going toward the upside again, we can still get to enter around that side and expect the next resistance point to break again. Then from there we get to smash our take profit and still get to make money in the market, guys. So that's to tell you that using this my risk management plan for this consecutive trading in the market is a very, very good way of trading, and from there you can still get to make money for yourself in the market, guys. So that's all about this consecutive trading in the market. Let me get to show you on how to do it aggressively also in the market, guys. Alright guys, so now that I've shown you on how to grow a small account using the consecutive way or formula in the market, I also love to show you guys on how to do it using the aggressive pattern in the market. So that from this video you can get to choose the one that suits you and get to follow it up. Then from there you get to make more money for yourself, guys. Let's get into the aggressive way or formula of trading the market. Let me get to show you on how that works in the market also, guys. Let's go. Alright guys, so trying to use the aggressive pattern of trading in the market right now is not something too big or something too hard for you to understand the market. It's just all about stacking or increasing your positions in the market, so that if at all you get to win the market, you get to win crazy amount of money, and if you get to lose, you get to lose in fact almost everything in the market. That's why a lot of people call it stacking trades in the market, why some call it flipping account in the market. But this is how to do it also in the market, guys. So in this aggressive pattern now, if I want to get entries around this side, just like the way I expect this place to be my entry point in the market, which is this part right now. If I want to get sales around that place, this place is going to be our stop loss in the market. Just like we have marked before, this is going to be our stop loss in the market. We're going to be risking $20 in order to make a much in the market. Alright, this is going to be our take profit in the market in order to make 118 or 100 and something plus in the market, guys. So right now that I've known our risk to reward ratio in the market, we're not going to care too much about the account size we're using, because we are ready to go aggressive on the market and get to make something reasonable if I thought the market goes well for us. So on this side now, if I want to take entries in the market, this place where I have my selling limit in the market, I'm going to place not one position to lose $20 in the market, but I'll place at least 3 to 4 5 positions in the market, so that if at all I get to lose almost everything, and if at all I get to win about 500 in the market, guys, within this little period of time. So that's how the aggressive pattern works. And if at all I want to get my entries on the higher time frames like the H4 time frame in the market, just like I've shown you guys before, if I get my entries around this place, expecting this place to be my take profit point in the market, okay, let's say this side as my take profit point in the market, and I want to get my entries around this side. For instance, I get to buy around the side, stop loss below, just like the way we used to do it, just a little pips below the entry point, in order for us to get to lose immediately if I thought the market doesn't want to go in our direction, instead of us to expect the market to take away the whole of this place, man. It doesn't matter how tight the stop loss is. What matters is get to know that if I thought the market gets around this place and it gets to break this, then the market is not going to be valid again, then you get to do it, man. But if you know the market is going to be very, very valid around that place where you have your horizontal line in the market, then you don't expect that to also happen in the market. So right now we're going to place our TP around this side, which is this place where we're expecting the market to come around. So we expect to make about, alright, we expect to make about 1000 something in the first place, I think so. Alright, so that's saying 1000 something in the market. For instance, we get to place 5 positions in this market, and we expect the market to lose 27, 27, 27. Then we get to lose almost everything on the $100 account size in the market. Then from this side, now if you get to go well in the market, we expect that from this place now, we're gonna make 1000 something in the market. 1000 times 4 or 5 in the market, it's about 5000 in the market. But one thing about this aggressive pattern of trading is that it's very, very risky, because you're always ready to lose, in fact almost everything you have in the market, in order to make something in return, and your chances of getting to the market is just like view ones in the market, which is the fact that you're trying to use one good setup to pack a lot of money in the market instead of getting a lot of interest in the market, or you get to lose in fact 90% of your account size. Then from there you get to expect whatever the market has to do for you guys. So I won't advise you to go into flipping of account if you're still a beginner. But if you're someone that have known your edge and you know that this is going to work out for you, or this is not going to work out for you in the market, you know this actually working out in the market. I have tested it a lot of time to get to know that if I thought you get to enter on the side, you don't expect the market to do what, go against you, or if I thought the market goes against you, then your calculation wasn't right in the market, then you can do this in the market. Then you can get to use this aggressive pattern of trading and still get to make money in the market, guys. So that's all about this aggressive pattern of trading. So let's go back to our M15 time frame in the market right now. Consider the market is still rising toward the upside. Just like we have market already, we expect this place to be our entry point in the market, get to lose little amount of money, or if I thought this place doesn't get to work out for us in the market, we get to enter around this place and still get to lose little amount of money while trying to get something big from the market, guys. So whatever gets to work for us, that's it in the market, and that's what we're gonna use to get to make more money for ourselves in the market, guys. I think that's all for this video. Let me get back and get to conclude, guys. Congratulations to yourself if you got to watch this video to this point. Get to process this in your chat and get to see results for yourself, guys. Don't forget to do what? Hit that subscribe button, hit the like button, and don't forget to tell your friends about this channel, guys, so they can also get to watch and get to learn on how these things works in the market, guys. See you in my next video. Peace and love.